You know, if you think about it on a purely theoretical basis, every time a transaction takes place on the New York Stock Exchange, somebody is wrong and somebody is right.
It's a very rough game. I think it's the toughest in the world. As I said to someone the other day, you're running a manufacturing company and you make a mistake, it doesn't show up for a long, long while. But in this business, it shows up in the newspaper.
Well, stock market is not a science, it's an art. You don't get 4 by adding 2 and 2. There's so many intangible factors involved.
Science, art, game. This is Wall Street, castle of capital. Inside these towers, the task is to make money move, to plant the seeds of fortune. Here, 1,000 enterprises change their courses, affected by quiet decisions in quiet rooms.
On the 37 million West Indian Telegraph preferred stock issue, we've authorized officers to sign contracts on that. And we authorized the signing of the contracts, the forced call of 6,000,007 Harderslinger Corporation, which we have a 23% interest.
Money moves also in other, noisier rooms, where overnight change spins the world's markets. This is the basic stuff of Wall Street. Not shoes or ships or sealing wax, but pieces of paper. Other pieces of paper, these certificates for stocks, representing portions of ownership in corporations, become currency also as they flow into the greatest marketplace in the world. The importance of Wall Street can be summed up in one word: liquidity. The ability to move cash into stocks and bonds and back into cash immediately. This is the pivot on which the economy swings, the lever that can create fortunes. To reach the complex sophistication of this market, the spirit of capitalism trekked 600 years, from the Hanseatic traders of the North Sea to waterfront Dutch coffee houses, from Renaissance princedoms west to imperial London and west again to this capital of capital, the 5 square blocks of Wall Street. This is a daytime world. At 7:30 each morning, the advance guard drifts into the deserted concrete canyons. At one end of Wall Street, historic Trinity Church waits for the market movers from city and suburb, who are now setting out by limousine, commuter train, and taxi. Today, Robert Stott will risk large sums to maintain a market in 29 great corporations. Today, thousands of shares of stock will be bought and sold for institutions by Desmond McCarthy. William Donaldson's firm will develop a concept which will change the investment status of an industry. Surging from packed subway and ferry, 1.5 million people cram this island tip as trading hours approach. In this world of numbered paper, no piece would move without a swarm of messengers and clerks, typists and telephone operators. Billions will flow around them, unreal and unfelt. Every morning at 9:55, an official enters a special door of the New York Stock Exchange. At exactly 10 o'clock, he will ring a bell that sets off the day's trading. The ticker's erratic pulse focuses the activity, unites the community.
I bought about 6,000 yesterday. And I want to buy another 10 or 15, something like that.
How much Sinclair did we buy? 1,000?
Because I got 50,000 shares of that stock to sell. It just never stops.
Is that the activating point?
That's the activating.
When you get over, I'd like to cut back to 150 rather than 200.
Into brokerage houses come orders for stocks, bonds, futures in cocoa, sugar, wheat. Each will be sent along to its own exchange. The orders for a few shares or for thousands come from 100 cities, from tens of thousands of people of all professions and every degree of income, united with one common expectation: profit. Amid the din and turmoil of this trading floor is the most important market in the country, the New York Stock Exchange. The 900 brokers and a regiment of aides have one function. For a commission, they execute the flow of orders sent into the market. The exchange itself does not buy or sell. It simply provides the place, the house, and the specific posts at which the stocks of 1,270 major companies are traded. Moving from post to post to buy and sell millions of shares a day, brokers keep in mind the house rule that prevents bodily collisions: no running. Here, in a world of buyers and sellers, eighths and quarters, the rigid law of supply and demand determines the best price for a stock, that moment's mirror of the market. In a shorthand jargon, trades take only a few seconds. There are no written contracts, no handshakes, just a brief note on a pad. A man's word is his bond.
Third McGee, 7/8 for 404, take him.
Within a minute, the trade is recorded, dispatched, and etched into financial history.
Order's crazy. 6/8 quarter ticket.
At every post stands a key man, the specialist, who deals only in a few assigned stocks. He uses his capital, within reason, to sell stock when there are no sellers, and to buy stock when there are no buyers. This buffer action cushions swings up and down. Into the specialist's book go future orders. Sell at this price, buy at this. The contents are secret, guarded by the specialist's integrity.
The whole thing was sold.
Robert Stott has stood on this floor as a specialist for 37 years. One of the most respected of all specialists, he constantly risks his own money to maintain an orderly market.
If you're going to specialize, you have to start as a young man, otherwise you'll never be successful. Well, the risks involved. When you start as a young man and you get a substantial licking, it won't bother you because you don't have the responsibilities of a married man or an older man. And you realize as time goes on that this is part of the business. Every now and then you're going to take a substantial licking.
What is the biggest licking you ever took?
Well, I was asked to make a bid on a large block of stock because an estate needed money to pay its taxes. I thought I was making a good purchase, and I bought 130,000 at 134, which is roughly about close to $18 million. I succeeded in selling part of it at a profit, a very small part, and I wound up taking a very substantial licking on the balance.
Long shadows of history cross Wall Street. Here in 1789, Washington first took the oath of office. Here, the first Congress met and wrote the Bill of Rights. When the United States was 3 years old, merchants formed the first securities exchange, meeting daily under a buttonwood tree, an act commemorated by this spindly plant. Across the street, the House of Morgan, financier to governments and kings. Here in 1920, a bomb mysteriously exploded in front of the building. The shell marks have never been eradicated. A film record remains of the unsolved crime in which 38 people were killed. Nearby was the site of the curb exchange, where clerks in office windows wigwagged messages to the members below. A market open in all weather, trading was a melee of shouts and hand signals, a practice continued today by its successor, the American exchange. Basically working on the same principles as the New York Stock Exchange, the American Exchange has less stringent requirements for the listing of new corporations. Therefore, it has traditionally been the home of younger, smaller companies. Behind these walls, spread over 1,000 offices, is the broadest of all markets, the over-the-counter market, encompassing government bonds and thousands of stocks not traded at exchanges, from august banks to the most volatile of fledgling firms. Each of the competing trading houses is linked by vast banks of wires and phones to outside brokers who shop constantly for the best price for their clients. Incessantly, the telephone demands prices for hundreds of stocks, all in a bedlam that becomes a norm for men like Bob Topol.
I think as your ear is attuned, you can pretty well pick out from what's happening, from the noise behind you, which stock. You always hear Trinity Steel, for instance, I hear is my stock. 16 1/4, 17 1/4. It's my stock. I can hear it no matter what stocks they holler back there. Gradually, through the years, you hear them.
In these firms, assigned dozens of stocks, each trader has the responsibility for a position ranging from $50,000 to $500,000, depending on his experience and intuitive ability.
I think a natural trader, a trader who makes money, is born. A lot of what he learns through the years' experience adds to his knowledge, but his basic trading ability is innate. He's born with it, and nobody can teach him this. Nobody can give him the feel that's in his stomach or that he snaps out of the air.
Vitamins, 14 5/8 for 500, 132.
The primary objective of these trades is not investment. Their target is a fraction of a point and a flowing market, the continuous turnover of the stocks they hold.
I'm playing a trend. I'm not playing a stock to buy at 6 and sell at 60. I want to buy it at 6 and sell it at 6 1/8. Or buy it at 60 and sell it at 16 1/4. I couldn't care less what price it's selling at. As long as when I buy it, I think I can sell it for a profit. We hope to be right 7 times out of 10.
In still another world of trading, commodities, lie the future prices for copper and cocoa, hides and flax. Upon the senses of these tasters at the Coffee and Sugar Exchange rest the price and grade of tomorrow's coffee. Commodity rules say all trading shall be done by open outcry across a ring. Here, futures contracts are bought and sold that cover prices of crops and goods for delivery months ahead. Bursts of trading erupt on news of all kinds. No political movement in Brazil, no hurricane that threatens the sugar-rich Caribbean escapes this market's eye. This world is for professionals.
One base solid 5. Lay it 5. One base 5. 4 for me. 4 for me. 5. Come on, ready.
Do you ever get hoarse?
Oh, yes, I've lost my voice. I've done that several times. And so has every other broker in there.
What do you do when you lose your voice?
Well, you run around the ring then. And you hear a bid or an offer that you want, you'll hit the man on the shoulder. That's the best thing you can do.
Noon, but the market makes no pause for lunch. At Eberlin's restaurant, almost a century old, the ticker's pulse continues over hurried talk.
Tourism seems to go unchallenged.
In the private dining room of the old investment house of Lehman Brothers, top-ranked industrialists lunch with senior partner Robert Lehman.
This is a great people sort of thing, but I wonder if...
They're red hot. Come on in. They're nutritious and delicious. Sauerkraut, sir. What are you drinking?
House silver, house chefs are traditional in rooms like this at Eastman Dillon Union Securities, where privacy ensures the confidential nature of the conversations.
As indicated, by and large, it's a pretty good rule to go into debt when you need the money, not anticipate money markets.
No, my friend, you pick the wrong crowd to talk to. Socialism. You better go to... You better
Let me have my say.
You better go to Union Square.
Yes, I go to Union Square.
Over here you belong.
Reactionary. Imperialist. That's what you have here. Wall Street.
Throughout the day, the ebb and flow of trading goes on. The tape's fluctuations are scrutinized also in Washington by the SEC, the Securities and Exchange Commission, the government's eye on the market. Under Chairman Manuel Cohn, the SEC constantly surveys and regulates the activities of those who make up the ever-changing market. After the great crash of '29, investors clamored for reform. The New Deal's answer came in 1934 with this commission. In its files is a record of its accomplishments toward twin objectives: to prosecute deceit and fraud, and to require full and honest disclosure of all pertinent facts about registered securities offered for sale. But the SEC cannot and does not judge the merit of securities or prevent loss to an investor.
No market is immune to cycles, ups and downs, sometimes violent squalls. But whichever way the market turns, an array of salesmen and analysts is ready to explain its behavior, predict its next move. However, loss and gain, wisdom and folly, are of each investor's own making. Each must meet the test of the unexpected events that excite or chill a market. A new drug, a bad earnings report, a presidential decision. Each must detach himself, according to cynical legend, from powerful emotions, greed in rising markets, fear in falling ones. To divine the course of profit, men use statistics, chart patterns, tips, or their intuition. There are optimists, the buyers, bulls in Wall Street slang, or bears, the sellers. An old proverb says, bulls make money, bears make money, but pigs make nothing. And there are other words of wisdom from Wall Street professionals.
The small investor, the large investor, any kind of investor, has one enemy, that's himself.
If you find that you're wrong, take your beating as fast as you can. If you find that you've latched onto something that's really good, don't be afraid to hold on to it for a while and really make some money out of it.
I think you have to make up your mind the range in which a stock becomes too high, and when it gets there, you just sell it, that's all. And as I had an old Aunt Ida one time said, you always want to let the fellow who buys a stock from you make some money too. And if you follow that over the years, by and large, you come out much better than trying to catch the tops.
You have to be a bull, in my opinion, in order to go anywhere.
To millions of small investors, stocks are to be bought, locked up, and put away for retirement or a child's education. To others, the market offers a vicarious excitement, a form of entertainment in a lunch hour, a casual hobby. But investing is absorbing, all-consuming work to professionals.
Nobody knows what a stock is worth. It's only worth what it's selling for.
To some professional traders like Wilton Jaffe, the abstract ballet of stock symbols on a tape has special meaning. The symbols act. They run, they jump, they tire, they sleep. These men feel the tune of markets from the tape.
Obviously, over a period of time, I see more than you see. I see the action of stocks, I see what the market's doing, and this gives me ideas as to what to buy and what to sell. I mean, you've got to watch it all day long. I mean, I can stop and answer a telephone or read the Wall Street Journal if I don't think anything's going on, but on balance, you must watch it. And if you do watch it all the time, you begin to see patterns and you see trends, and you begin to get a feeling of the markets, whether it's going to go up or whether it's going to go down, and this gives you the basic information to trade. This is not an investing function, this is a trading function. Kenny, buy 300 more Williams. The average investor has a tendency to take profits in the stocks that go up and to hold the stocks that haven't worked out. Whereas the professional sells all the stocks he has a loss in, and he doubles up in stocks that he has profits in. It's obvious, because where you're right is where your money should be. And where you're wrong is where you shouldn't have an investment. It's as simple as that. Kenny, how many Williams? Kenny, how many Williams did we buy now? How many we got now? Okay, buy 5 more now. Well, there are two kinds of non-professional investors that make a lot of money in Wall Street. The kind of people that don't know very, very much about it and just buy the big names. The General Motors, the Westinghouse, the General Electric. They hold them 15, 20 years, and they do very well. They're very, very bright. They know how to worm their way in and out of Wall Street, and they do very well. The vast bulk of people, in my experience, sort of use this thing as a psychological catharsis. They like to call up their broker. They want to feel they're participating in the big game. They want to know what the earnings are, what the merger is, what's happening, what's everybody doing, what's going up. They call you up 10 times a day. They want to get quotes. All the nonsense of Wall Street, they want to feel that they're part of the game. These people, if they make a little bit of money at the end of the year, they lose a little bit of money at the end of the year, really couldn't care less. Because what they really want to do is be in it. Well, you know, what can you say?
Matheson, Rob.
In the ferment of the trading room at Eastman Dillon, Desmond McCarthy continually moves blocks of thousands of shares of stock for the giant mutual and pension funds that are his clients. As with most other important traders, neither family nor inheritance brought him to this work.
When I came out of the Navy, I decided I want to work with my hands. I did not want to work in an office. I got a job as an electrician. Make a long story short, we ran out of work at 3 o'clock one afternoon, and they punched us out. Wouldn't pay us for the balance of the day. I didn't figure this was any way to make a living, so I went down to an employment office. They sent me to Merrill Lynch, P.S. Fenner and Bean, some firm downtown, and I was sitting on a bench when the head of the trading department came screaming through the door, looking for a body. He wanted somebody to work in his department. I happened to be the fellow sitting on the edge of the desk, so I was elected. He took me by the hand, talked to me about 5 minutes in his office. Next thing you know, I was running his messages in the over-the-counter trading department at Merrill Lynch.
Jerry, Roadway, how does it feel? John, we'd start with 1,000 just to see what he wants to do.
Behind this chair sits Roy Neuberger, president of the Guardian Mutual Fund. Gracing the walls of his office is a brilliant collection of modern art, the passion of a lifetime.
I went over and had my 21st birthday in Paris. And I liked Europe, and I was living a life of a bohemian in Paris. Well, I tried to be an artist in the bargain. I studied for about a year and found out I wasn't any good. And that my life work, however, would be to be a propagandist, to get people to buy the work of living artists. I needed money to do this. That's the only reason I went to Wall Street originally. Where is there money? And I was just still a young fellow then. Where's money? I said to myself, Wall Street. So I have to make a fortune here. So the first thing I banged into was the Panic of '29. So I had a little detour. That's a long time ago, and most people, it's just a word, 1929. It's a date. But to me, it was vivid. And I learned a lot. And I lost more than a half of what I had. And then started over again. And that was the only losing year I ever had, was 1929.
When you invest in big positions, do you ever make mistakes?
Oh, of course. On individual positions, very often. The main thing is, how well do I do when the cards are down at the bottom of the page? I try to be right about 80% of the time. I don't try for 100% because that is, well, just too difficult to be right that much. And I'd be too timid. I would never act if I had to be right 100% of the time.
The essence of successful investing is the correct contrary opinion. Just when everybody is convinced that a company or an industry is unattractive, if with the use of research and business analysis you can pick a change in that industry, and you're right, you will be buying the securities at the absolute bottom price.
William Donaldson is president of Donaldson, Lufkin, and Jenrette.
a company that symbolizes Wall Street's new respect for research. Years ago, in an era without regulation, much of investment information was personal and casual. It came from hearsay, rumor, and from conversations in exclusive clubs. Today, fund managers and the public demand more thorough study and a sophisticated approach to investment.
The relative earnings pattern has been downward for the last...
Here, twice a week, teams of trained young analysts meet to probe the economy, the business cycles, to pick out from a mass of economic data the points of opportunity.
We're looking for streams to be fishing in, streams that for one reason or another are going to be attractive areas over the next 4 or 5 years.
On the other hand, you have...
With the statistics as a base, the analysts spread out across the economy, seeking a complete and total picture of various industries, their weaknesses and strengths, their problems and prospects. They talk not only to officers of companies, but to their competitors, to advertisers and consumers. Finally, all the pieces of information are collated by the newest research tool, the computer.
It is not a foolproof approach, but we're playing the averages here. If we isolate and look under enough stones and isolate enough variables and make the best judgments we possibly can, hopefully we're going to be more right than our competition, who's basing their decisions on far less information.
At 3:25, an official once more enters the exchange. Just before 3:30, 15 seconds of clanging will close the day's trading.
Everybody goes out at 60, please.
Minutes later, the harbingers of evening's exodus arrive. Now a multitude of clerks balance the accounts, place the decimal points, transfer millions of dollars of certificates to new owners. For 20 million investors, the tape now stands still, leaving for the moment some poorer, some richer. As Gertrude Stein once wrote, the money is always there, only the pockets change. Its million people gone, the street once more becomes a silent concrete canyon, deserted except for a tiny group of artists living in bypass lofts off Lower Wall Street, painting pictures they hope the Rockefellers and Neubergers will buy in months to come.